In India's absolutely massive e-commerce market, a high-stakes battle is playing out right now. We've got a reigning champion and a disruptive new challenger, and they're completely rewriting the rules of online retail. So let's break down how this fight is shaping the future of shopping for literally a billion people.
Okay, so let's rewind to late 2025. The big festive shopping season in India had just wrapped up, but trust me, the real fireworks were just about to start. That's when the country's e-commerce titan, Flipkart, decided to make a move that sent shockwaves across the entire industry.
And this was the bombshell. Flipkart, a company owned by Walmart and literally built on taking a cut from sellers for every single sale, well, they suddenly announced they were going to a zero-commission model for a huge chunk of their products. This wasn't just some minor policy tweak, this was a complete reversal of their entire business model.
Now, of course, Flipkart framed this as a big win for small businesses. But you have to ask, was this really an act of generosity? Or was it a calculated, strategic declaration of war against a super fast-rising competitor that was threatening its top spot? That's really the big question here.
To really get what's happening, first, we need to meet the two giants at the center of this fight. What we have here is a classic showdown. On one side, you've got Flipkart. They're the established incumbent, backed by Walmart's incredibly deep pockets, and they've been ruling India's major cities for years. And on the other side, you've got Meesho, the disruptor, backed by SoftBank, and they are laser-focused on the smaller towns and cities, the places that are home to India's next billion shoppers.
And the whole battle really comes down to this one thing, the commission, or what the industry calls the take rate. For a traditional e-commerce company, this is their lifeblood. For years, Flipkart charged sellers anywhere from 6 to 15% on every sale. So to just suddenly ditch that, something really big must have forced their hand.
And that something big? Well, it has a name. It's time to meet the disruptor that started this whole thing, Meesho.
This quote from Meesho's CEO, it's pretty much their entire playbook. See, they're not trying to be the next Amazon or the next Flipkart. They were looking at these giants from China, like Pinduoduo, and they realized something crucial. In emerging markets, people buy small things often. And for these customers, the most important thing isn't speed, it's price. And that realization led to their core strategy, what we call value commerce. So forget about one-day delivery and fancy packaging. The entire goal of value commerce is radical, unbelievable affordability. It's a model built from the ground up for customers who care way more about saving a few rupees than getting something delivered tomorrow. And you can see just how ridiculously effective that strategy's been. I mean, look at this. By 2025, while the Flipkart group was still the leader in how many orders were placed, Meesho had just skyrocketed to the #2 spot, grabbing an incredible 21% of the market. They weren't just some small niche player anymore. They were a serious threat.
So, how'd they do it? What's the secret sauce? Let's break down the engine that powered all this growth. The zero-commission playbook.
It's all about this flywheel, and honestly, it's kind of genius. Step 1 is simple. You charge sellers zero commission, no fees. Step 2, this acts like a giant magnet, pulling in tons of new sellers, especially the small ones who can't afford high fees. Step 3, since sellers don't have to pay a commission, they can offer much lower prices. And finally, Step 4, those rock-bottom prices attract millions of new, price-sensitive buyers. This whole thing just keeps spinning faster and faster, creating this powerful, self-reinforcing cycle of growth.
So, faced with that, this is how Flipkart responded. It was a direct counterattack. They completely dropped commissions to zero on their main platform for any product under 1,000 rupees. And then, for their own value platform, Shopsy, they made everything commission-free. They weren't just trying to compete with Meesho's model anymore. They were straight up copying it.
But Meesho wasn't just sitting back and watching. With Flipkart now fighting on their home turf, they made a really bold move to raise the stakes even higher. They decided to go public and fill up their war chest.
And they moved incredibly fast. In early December of 2025, in just about a week, Meesho went from locking in its first major investors to actually listing on the stock market. It was a total blitz.
And the scale of this move was just massive. Meesho raised over 5,400 crore rupees. Now, to put that into perspective for you, that's over $650 million US. This wasn't just some small fundraising round. This was a gigantic injection of cash meant to fund the next phase of this battle.
The IPO put the company's total valuation at roughly $5.6 billion US. A valuation like that, it doesn't just happen.
It's a huge signal of massive investor confidence in what Meesho is doing and its potential to capture a huge piece of the Indian market.
But out of all the numbers, this one might be the most telling. The initial block of shares that they offered to the big, foundational anchor investors, it was oversubscribed 30 times over. The demand was just through the roof. It basically showed that all the smart money was betting big, and I mean big, on Meesho.
So what do you do with all that cash? Well, you get ready for war. They're doubling down on tech, like AI. They're ramping up marketing to get new customers. They're on the hunt for smaller companies to buy. And, most importantly, they're building up a massive war chest for the fight ahead with Flipkart.
All right, so this brings us to the final and most critical question. Where does this intense rivalry go from here? What does the new state of play even look like?
What we're seeing is a fundamental shift in the paradigm. The old e-commerce war, that was all about who could deliver the fastest to people in big cities, and it was paid for by seller commissions. This new war, it's all about radical affordability for 1 billion new users in smaller towns, and it's going to be funded by things like advertising and other services. The entire game is changed.
The bottom line is this. The main way these companies compete has completely shifted. It's now a race to the bottom on price and a race to win over India's most price-sensitive shoppers. Convenience has officially taken a backseat to cost.
And that leaves us with the final, massive question. Now that the rules of the game have been totally rewritten, who's got the edge? Will the incumbent titan, Flipkart, with all its money and logistics, manage to adapt and crush the competition? Or will the nimble disruptor, Meesho, with its deep understanding of value commerce, actually win the war for India's next billion shoppers? The answer is going to define the future of retail in what is probably the most exciting market in the world.